CEO of KPMG, Paul Knopp, wrote an op-ed in the Wall Street Journal that was published earlier this month. And the headline is "The Dying Language of Accounting." It's Paul Knopp saying, hey, we've got a decline in CPA candidates and accounting degrees. He mentions the stats we always talk about, that the number of CPA exam takers in 2022 reached a 17-year low. Bachelor's degrees in accounting have decreased over 2020 to 2022 by like almost 8%, continuing a downward trend since 2018. He mentions the material weaknesses that were reported by over nearly 600 U.S. listed companies, and it's related to personnel not having enough accountants, and that municipalities are risking credit rating downgrades due to delayed financial disclosures. And what he calls for to solve this is actually reforming the CPA licensure process, what we've been talking about, eliminating the 150-hour rule or creating alternative pathways, focusing on experience rather than extra academic credits. He does say that salaries are increasing because of this labor shortage and that starting salaries at KPMG have outpaced inflation. And in a follow-up, Wall Street Journal posted letters from CPAs. I guess this opinion piece by Paul Knopp stimulated a lot of letter writing. And the number one issue that the writers, the actual CPAs who wrote in, cite is the long hours and insufficient pay. The grueling hours required, coupled with compensation that does not feel commensurate with the workload. Several described accounting firms as sweatshops, mentioning that while juniors put in investment banking hours, they don't get investment banking pay.